Dan O'Brien and myself put this together, and I like to approach these things as a conversational approach. So, Dan, join in anytime through this as we go through. What we're going to focus on today is mainly international events and situations. So I'm going to just highlight the current issues and events that I've been watching that are driving these grain and oilseed markets. I'm going to chat a bit about the coarse grains and particularly the corn overview and outlook international. Dan's going to move to wheat and oilseeds, and then we'll have time for question and responses. And I definitely put responses in there and not answers because I don't know if economists can always give specific answers very well. So moving forward to some big picture issues. I always like to do a quick run around the world to just remind everybody what's on the table at the moment. And at the moment, I'd say in my 35 years in the commercial grain trade, I don't know if I've ever experienced a time that has had so many moving parts that are moving in such a dramatic way as they are, particularly in the last 6 months. And I'd say even in the last 12 to 18 months, it's been pretty dynamic issues happening around the industry. Forefront is the COVID-19 issue. It's supply chain disruptions, along with shifting demand and consumption patterns that we're seeing across a number of the end user commodities, whether it's meat or bread or whatever that is. We're going to have the impact of a global recession / depression as we see a drop in per capita GDP and disposable income. Another big driver at the moment, which Dan talked about the other day, is record production, not only in the U.S., but globally. We're seeing record production in coarse grains and corn, about 1,464 million metric tons. We're seeing global record production in soybeans of 370 million metric tons. There's a lot of grain out there. Particularly, we're seeing that in South America, Brazil, and Argentina, as well as the black, particularly for wheat. We're seeing changes in trade flows and also dynamics in the transportation, and I particularly look at the ocean freight situation. Big underlying driver, as we're going to see record consumption, is the animal husbandry industry for animal products. A big issue sitting in that is African swine fever, not only in China, but across Southeast Asia. That's increasingly difficult to quantify. We're seeing volatility in currency. We're seeing quite good strength in the U.S. dollar, although that's come off a bit in past weeks. For most buyers, it's looking for U.S. product to be very, very expensive, whereas you're looking at countries like Brazil and Argentina with their record low valuation in their currency. They're seeing record high prices in their local currency equivalent for commodities. We're also seeing increased trade tensions and trade issues arise. Forefront is China, U.S. trade relations. I'm going to jump into that in a bit of depth. It's particularly to corn as well as soybeans, but particularly corn. The Brexit issue, we're trying to negotiate trade relations, new trade deals with Great Britain, Latin America, Kenya, Sub-Saharan Africa is actually on the table as we try to negotiate those moving forward. And we're all familiar with the recent volatility in oil prices and energy as that relates to ethanol prices. On the political side of things, a lot of dynamics there. We've got the geopolitical issue and security issues with China, which are quite deep. We got U.S. election coming up, which is adding some extra dynamics. And then we also have sustainability and climate change issues that are increasingly driving a lot of the dynamics in the marketplace, not only in the U.S., but internationally as well. So moving to the world corn situation and outlook. Being an economist, I sort of like to look at spreadsheets and numbers. I'm going to try to move away from that a bit as I put some of this in pictures. In this world balance sheet, as I mentioned, we're seeing world record production of corn, of about 1,100 million metric tons, 1,171 million metric tons of corn. That's a lot of grain that we have to dispose of through the coming year. Feed and residual is the significant growth in the demand point on that, and we're going to talk about feed consumption a bit. We also expect world trade this coming year. Now, because of the price structure and carry of the market, most of these end users are buying hand to mouth. They don't see a need to go forward price a lot of grain, and I think that'll continue for some time. That means with this record crop and record supply, it's going to take some time to convince the market that we're going to tighten things up. I like to bring it down to a stocks to use ratio. Dan talked a bit yesterday in the U.S. since globally we're at 27% of stocks to use, which makes for a very, very loose balance sheet. It has tightened up over years, but it's still historically quite a loose situation. The U.S. stocks to use has a better correlation to futures price and values, so the global one's interesting, but I don't dwell on it too much. This drive in feed demand is really what's driving things. That's coming out of China, Southeast Asia, Latin America, as people increasingly consume animal products in their diet. This per capita GDP and disposable income, we expect it to impact that. I don't know by how much, but I listened to some other experts like Glenn and Glenn Tonser. We're still expect good, strong feed demand around the world. This export number is what we want to look at. We're seeing, as I said, a front end demand, and that's going to go hand to mouth on the global trade situation. And the stocks to use situation, as I said, is still quite loose and pretty high. World production, key point takeaway here is you put the U.S. and China together, that's over half the world corn situation. They're also the biggest users, but a third of the world corn is grown in the U.S., a quarter is grown in China. And that's a significant volume of corn that needs to be consumed. But those are the two key players in the corn market. Looking at consumption's a bit more spread out. Again, U.S. and China consume half of the world consumption. Most of that's domestically. Big one that moved up last year is the EU. It's at about 7%. The real driver in that is the growth in animal feed, but also the wheat-corn spread, as less of that wheat is going into the feed market, more of it's going into milling. Mexico and Brazil are also key consumers there as well. Coming to the ending stock situation, and I like the long-term history on that because it shows just in the last 7 years how much ending stocks the world is carrying. However, the key thing to look at that, China holds 2/3 of that, and what happens in China is always a bit foggy and not always transparent. It's quite opaque. So you got 60%, nearly 2/3 of these ending stocks sitting in China, and they're basically not accessible to the market. That said, with sufficient stock sitting in the U.S. and also other exporting countries, those inventories are readily available to the marketplace. Hence, we don't necessarily see too much pressure in price to ration that demand. I'm going to skip that U.S. balance sheet and move on to trade. As I said, we expect record trade this coming year, around 180 million metric tons. These are the major importers. The interesting thing about corn, it's not as concentrated as soybeans and some other commodities are. However, as I said, the EU's moved up to consuming about 13% of the imports and be the biggest importer, then followed by Mexico and then by Japan. Just looking at old crop for a bit and talking about China a bit, they have stepped up their corn purchases. Their TRQ quota is about 7 million tons. They're expected to fill that, but recent purchases have been about the 2 million metric tons. Thing to remember about TRQ, I think that's on a calendar year and not a marketing year, and these numbers are on marketing year. The interesting thing is they've been quite aggressive in grain sorghum. as grain sorghum is not as tightly regulated and a bit more of an open market that we're seeing in China. So we've seen good, strong purchases for that in the last year, and why we have sorghum prices above corn. Moving on, looking to new crop situation, we really see their aggressive new crop purchases in the last 2 months showing up in forward sales for new crop, forward purchases for new crop for China. As you can see, corn really hasn't been on the radar for a good number of years for China, and today there's about over 5 million tons of corn already purchased. We look at sorghum 5 years ago, they were quite aggressive on their new crop forward purchases. Haven't seen them in the market that aggressively till recent, but we're seeing about 1 million metric tons of sorghum already bought by the Chinese, which is keeping those new crop values quite strong. The difficult thing if you're making planning decisions is China going to be there next year or 2 years from now? We'd hope so, but it's always a big question. I'll skip the exporting countries, move to price relationships. U.S. FOB offers today are quite competitive in the global marketplace. They've dropped below Brazil offers, which is good. Should make U.S. very competitive into most of the markets around the world. Argentine markets are still quite heavily discounted. Interesting is the Black Sea as they continue to increase their corn exports. A lot of that will be moving into Europe because of freight spread advantage, and that which brings that price relationship between Black Sea and the U.S. a bit closer together. But it's just Black Sea is continually the cheapest seller of commodities around the world. Just to take a minute and look at China a bit. Friday afternoon and a long lunch and good steak and a bottle of Australian red wine. I could spend quite a bit of time talking about China, but I'll try to condense it into less than 5 minutes here in the time I've got left. Look, China's full of contradictions, and we're being told that China has started an economic recovery, but what's really happening in China? One thing you always keep in mind when you're talking about China is food security has always been at the top of the priority list and will continue to be. We're starting to see some improvement in their economy as unemployment fell by 0.2%. And their import trade continues to increase a bit, which is good. Dan talked a bit about the floodwaters, and I'll touch base on that a bit. It's significantly disrupting logistics, particularly for corn. There's a lot of grain that moves up and down that Yangtze River, as well as products, soybean meal particularly, and as well as flooding disrupting the rail movements. That's more of a problem, I think, than actual crop loss, particularly for corn. Most of the crop loss is more in the rice category than in corn. The hog situation with African swine fever continues to devastate that. I'll go into that in a bit here a second. And then the underlying politics. Thing you got to keep in mind, while China may appear to be a market-driven economy, it's a centrally controlled economy, and the Chinese government does a very, very good job of moving that economy around the way they want to, and they're always playing the long game. And so you just don't make the mistake of thinking they're a market-driven economy. This is China's production area on agriculture. Take a snapshot of that in your mind. This is now where we're seeing the flooding over the Yangtze River. It does lie over a significant part of the agricultural producing area. However, most of the corn production is up in the northeast, up in this area, and then way down south. But there's probably about 60 million tons, 70 million tons of corn that moves from northern China to southern China. 30 million tons, 35 million tons move by rail to destinations north of the Yangtze, and then it moves by water out of Dalian to the southern parts, and that's where most of your imports come into is down in this southern area. Just to highlight the meat price situation as it drives feed grain purchases. This is the price of beef, pork domestically, and then beef and pork imports. As you can see, we're at record high on these. And the thing I want to note is look at the spread between the domestic pork price and the imported pork price, the spread between the red line and blue line. Now, key thing about pork in China, 60% of the world's hogs are in China. The pork price in China has a very, very good correlation to the consumer price index. In China, they'll call it the consumer pork index. And that graph on the left-hand side shows the correlation of the change in pork prices relative to the change in the consumer price index. On the right, the graph is the average live hog prices for China. And you would think there would be a lot of pork coming in, even through without tariff exemptions. It's driving that. Thing is, you have to get an import permit. And what we've seen in the last 3 months is pork imports from the U.S. to China drop off by about 40%. And even though the economics are there, it's just not happening. And I think the management of the import permits has more to do with politics than it does with the domestic situation. It's a very tight balancing act they're trying to manage in that situation. Again, coming back to China, controlling the world's ending stocks. This is China's ending stocks. Now, the question has always been, are they really there, and what's the quality? Ending stocks are estimated to be about 194 million metric tons. It is widely believed across the trade that probably half of that is not there, which would bring their ending stocks down to 100 million metric tons, which is significant. But I think a lot of that's factored into the market. A lot of my contacts in China are actually suggesting it could be as low as 50 million metric tons, which current market prices for grains across China would suggest something between 50 and 100 million metric tons. Now, the official number is still 194, but that's the biggest question that we're looking at for corn. And I would suggest China's going to buy more corn this next marketing year than there's 7 million metric tons of TRQ, and it probably would be closer to 20 million metric tons or better. Even at 20 million metric tons, I don't know if that changes price significantly, but we get above 25 million metric tons, and then we could see good support for corn coming into the marketplace. Let's see, I talked to both these two slides. Just some notes. I'd encourage you, I made quite a bit of notes on the page notes underneath this presentation, so I'd encourage you to have a look at that. Here's a takeaway point. China's full of contradictions in terms of what we're told by China and its recovery and what's happening in the market. Do not forget, on the surface, China may look like or act like, for the most part, a market-based economy, but in reality, it's not. The invisible hand of the Chinese government is omnipresent, and where needed, they will exert pressure against regular market forces. And I'm paraphrasing a good former colleague of mine, Simon Quilty, who works for Global Agri-Trends on that, so I got to give credit where credit's due. So that's the comments from a corn situation. Dan, do you want to work this over?
Before I pull mine up, I had read some of the resources you were looking at as you sent them on, Guy, and sounds like yes, they're a politically driven economy, and it's appeared that they were that if they we're not here to talk politics directly, but if they are holding off to see what happens for the fall elections, then if they may have pent up demand that could come in after November. At least that's the gist of what I got from what you had sent me.
Yeah, definitely. And I think when it comes to economics, it's important to discuss politics from the point of view of what particular scenarios are going to change or drive the marketplace. And we need to be quite cognizant of that. And with the information coming out of China being quite foggy at the best of times, it's just a hard one. But I think we need to be, particularly in the ag sector, because so much of, I think, the potential upside market is going to be driven by China. We just need to be sensitive to that. Try and take our emotion off the table and just analyze it in a very pragmatic way.
And these, the way the USDA scrambles to understand what goes on in China on those stocks is mind-boggling. Was it wheat that just within the last year or so they made a tremendous increase in
Yes.
stocks. It changed everything. So the USDA dramatically increased the stocks of wheat, and it looks like they could just as well, if they had the evidence, dramatically decrease the stocks of corn. So that you might think, well, that doesn't make a lot of difference, but boy, it just really boggles our understanding of how to view world-ending stocks and the relationship that has on prices. So
Yeah.
what you'll see for our numbers is pending the next revelation of what we understand for China ending stocks. So.
China at the moment, they're kind of with feed grains where they were at oil seeds about 20 years ago, and it comes down to basically a water resource equation. But they just, food priority is tops. They're going to maintain self-sufficiency in rice and in wheat. They let oil seeds go. They're the biggest importer of oil seeds around the world now. And with their growth and demand for animal products, meat, milk, dairy, they're going to have to make the decision, I think, to open up that feed grains market and be a lot more liberal on that in order to produce enough meat and access enough animal protein to satisfy the demand of their economy. And India has a similar question they're facing, but they're sort of at that point, and I think struggling with that a bit. So the other thing on the wheat, we're seeing the change in the dietary demands. They like more European-style breads and products, and I think that provides some opportunities for some quality U.S. wheat to continue to grow and go in there as well.
And we're not trying to be crass here, but half of the grain sorghum from the U.S. probably goes into beer production over there. Did I hear you tell me that right the other?
It's about 40%, I think. It's not quite half. It varies.
Wow.
The inelastic demand, it's Baijiu. It's not really beer. It's grain alcohol moonshine, and it's pretty rough. The interesting thing is they sell that as a health food product. And I don't know if it cures COVID-19, but I had suggested that, and maybe that's what's underlying the demand. Don't know.
Well, since we're off into the weeds, maybe we better get back here pretty quick. So let's go on into wheat then, the time we have left. The overall for wheat, basically, this is a market worldwide, given our assumptions that we know what's going on in a number of these countries, particularly China, where the stocks are growing. Here of late, there have been some, particularly in the European Union's most noticeable cutback shortfall they've had. You can see it on the drought-oriented maps where things are tight there. Some shortfall in Kazakhstan and Turkey. Global consumption, they talk about it being lowered marginally in this latest report, but generally it's been trending to the positive side. Trade following that. What you don't see in the outlook is a major crop shortfall amongst what has become the big three of the five major exporters: Russia, Ukraine, United States, all with decent crops and no big surprise to the market. Even Australia thought to be coming back pretty decently. And so you end up with a world's wheat supply use stocks picture like this, where you're, by the way, Rich, can you see my cursor as I'm using that?
Yes, Dan.
Okay, good. You can see on the production growth of 1.9% per year, but actually sort of leveling off. Total usage, 1.7% per year since 2007. Really very consistent. So if anything gives us year-by-year opportunities in the markets, it's this consistent growth in the use that met with inconsistent growth in the production. Exports generally trending higher. But this, again, with a fair chunk of this, if you look at world wheat ending stocks, 315 million, 17 million metric tons, 150 of that, 152, 153, 154, basically just about half of that is all China. So why do we talk about China? Just because it so affects the aggregate numbers. And you get production use, exports moving higher, ending stocks. When you have a trend like that, where stocks 317 million metric tons, compared to 2012-13, that last drought year you can go back to see 183 million metric tons in the 12-13 marketing year, 128, 2007-8. And we've seen growth in wheat. A lot of places can grow it. And in the bigger picture, the bigger swag of all this, you do see where with all these countries being able to grow wheat, it's pretty tough competition for the U.S. And it goes ways towards explaining our declining acreage and challenge on the wheat side. From the latest USDA reports, just give you a quick overview. You can see for some of the major exporters, Argentina, European Union, Russia, Ukraine, United States, some comings and goings in terms of their export numbers. A little lower, smaller crop in Argentina, European Union. They have a drought over there, drought issue, particularly in France, to deal with. So a sizable reduction. What was rumored to be a crop problem that was coming has turned out to not be in Russia, with a decent crop on the way and exports increasing. Ukraine, strong export competitor with the U.S. And there you see the U.S. So Russia is anticipated, projected to put out markedly more wheat into the market than the U.S. is. So we're still an important player, but amongst these folks, the major exporters, we're number 2, Russia number 1, and European Union just about with us. You can see on the for world wheat production, where the U.S. stands, 50 million metric tons forecast for this coming year. Total for the world at 766. So we're important, but again, a lot of places in this world grow wheat. Argentina, Canada, Australia, those 3 with increased crops from the previous year. Again, there's the European Union down about just about 20 million metric tons. So if there's any place that tightens up, that one of our competitors that's not quite as strong in the export markets, that could make a difference on our markets, it would be the European Union shortfall. You can see again Russia, Ukraine down a little bit, but still exports in decent stead. Kazakhstan, mainly kind of a regional exporter is my understanding. And there's China and India. They're not major exporters, but they grow with their big population, stays pretty much domestically. But I would say, Guy, with that map you put up there and the sizable nature of all that, of the area hit, I need to see wheat production map in China to see if that 136 million metric tons that they're projecting is really valid or not. We'll trust until otherwise, but we do need to verify. And you can see trade changes for a lot of the importers. There's again comings and goings. I kind of view these as all marginal changes, except for Pakistan. Pakistan eliminated an import tariff, and it went from 100,000 metric tons to 1 million metric tons. Excuse me, I gotta get my zeros right. So, quote, they're in the market. So that in itself, and what we'd seen the last few days in the market, along some other factors, this had a fair amount to do, that news in the market of some of the support we'd seen in the last day or so for wheat. And then there's the U.S. Again, we have imports, but a lot of that's what happens back and forth across our northern border with our Canadian neighbors. Just some recent reports as far as regions that are expanding in the world. It is interesting. Egypt, Algeria, Morocco, Tunisia, Libya, i.e. North Africa, is thought to be an area of expansion. These are not, when you look at Egypt, Egypt's a pretty strong economy, but generally these are not tremendous economies, but they have a lot of people. And when you look at, there's North Africa, the red line, and I guess if you're looking for positive news and in the overall markets and look at major wheat importing regions and their millions of metric tons of their trends since 2010, really all of them have positive trends. Now, fiddling with the scale is important. If we put this on a scale of 0, that line wouldn't look so strong to the high side. But the point is that they're all going pretty high. It does look like the Middle East down a little bit lower here of late. But take this for positive news that wheat importing regions of the world are generally trending higher. But the other challenge of that is that wheat production is also trending higher. Similar to a chart that had been shown by Guy, this would be for wheat. You can see the export bids, different parts of the world. This is again U.S. dollar, U.S. currency balanced out, and you can see the price for the U.S. at FOB export bids. Again, U.S. $215 a ton, EU $216, others generally higher, Russia lower. Big deal for a while with Russia for those Black Sea locations is just logistics. Where they're located relative to a place like the North Africa compared to where we're located is has a lot of logistical. Well, you have logistical costs in play. So with what Russia has, they're in a better position to meet those demands first than we are. If Russia's short, then those places have to go elsewhere. That's tends to be how we compete with Russia. But if Russia has the supplies, given their poor currency, also we have a tough time in the U.S. given our currency and logistics to compete with them. You can see daily U.S. export bids just by class. Just interesting with the excitement or lack of excitement we've had of late for different types of different classes of wheat. Of course, here in Kansas, we're pretty focused on hard red winter. And you can see the run-up we had in early mid-July and the general fall-off we've seen in hard red since that time. The soft red numbers doing pretty good. Hard red spring doing pretty good. Soft white doing pretty good. So at this time, we're kind of lagging in the hard red side. Of course, we just had a harvest too. I show you these maps. We try to follow the movement of wheat and other crops on a weekly basis to see how we're doing relative to previous years. Look at all U.S. wheat. We're keeping up the best pace that we've seen since at least 2015-16. And I look at this on a weekly basis in our radio programs, and you kind of look at that bottom purple line, total shipments and new sales, 389 million bushels, 39% of the USDA's most recent projection. That was the August 12th projection, with about 10 weeks, 19% of the market week in. So generally, that's positive news. We're bought ahead and moving some wheat. So good news for wheat. Just want to put this up there for your reference. You can kind of see who's buying wheat. China's in this, but so are a number of other countries. There's no one country. There's Mexico at 5. If you look at the third column in 552 1,000 metric tons. There you go, 552,000 metric tons this year, down some from last year. But China now, Japan, Philippines, a number of other countries, all are buyers, but not like in soybeans, where there's that one primary buyer. So the wheat market has a number of different players that we're all involved with trying to keep happy. Hard red pace of wheat exports, also highest level equal to the highest rate we've seen since 2015-16. There's that purple line again, 140 million bushels, 35% of the USDA's latest projection, with about 19% of the market year complete. So I think you classify that as positive to bullish. Even hard red spring running the same. So relatively weaker currency doesn't hurt this. Just one last thing to look at. When you look at world wheat ending stocks with China thrown in, it looks like, gosh, we're at about 43% stocks to use, price about 450, and it just looks like we're heading off to the right. If you change that and use an adjusted U.S. wheat price and world less China, the first thing you get is a very messy chart. But you can see that that's a different picture if you take China out of that picture and see where we're at. Basically, we're not far from being on the demand curve, if anything, having shifted down just a little bit from where we were 2 or 3 years ago. So it's reasonable to look at the wheat market and see where we're at relative a currency adjusted price and taking China out. Take a look in the time we have left at soybeans. Uh, you know, this is a chart we looked at yesterday. World soybean demand and export prospects. Will the China flood impact soybean trade in quantity grown and logistics in the country? I think, Guy, your point's right on. It's logistics. Can they move grain within the country? When we had our flooding here last year, yeah, we a lot of cropland got messed up, but the railroads couldn't go, and any barge traffic, all that was stopped. So is it cheaper for them to pull grain from the U.S. into a port and make feed or whatever they're going to make it than to try to get it from the interior? So that's a distortion that they and we will be reckoning with for the next bit of time. So potential for China to be very aggressive buyers. And we have some uncertainties still on our crop. The Iowa storm went through, so we have some uncertainties too. But that the uncertainties that China has is that as that primary buyer, 60% of the world's soybeans bought. That's a big thing. Basically, you just heard me being pretty pessimistic on wheat. For soybeans, we've had a situation where we've had growth, pretty steady growth. This next marketing year, 363 million metric tons projected. However, a good chunk of that is on the South American crop, which won't be harvested till January, February, March, April, May of next year. So we're betting on the come on that, and you have pretty good usage. Exports projected to keep growing, and yes, not terrible stocks, but a trend to tightening up a little bit on the stock side. So that's something to watch. It's by no means gangbusters for soybeans, but it's just not a runaway bearish market. There's some positives, and you can kind of see where that all comes in. And just for your information, you can see as they kind of look at those major exporters, the United States, Argentina, Brazil, for their exports, and some changes generally for exports and imports. Argentina has both imports and exports as they try to keep their milling. What's their incentive to send soybeans out and bring meal in? Well, that'd be kind of different from what they've done in the past, but they've had economic change down there and challenges with their farm sector, agreeing or disagreeing with their government, and export taxes all in play. So a lot of confounding things. Brazil exports projected to be, again, you see that note, strong China demand. And it's true. When China turned its back on dealing with the United States, they went to Brazil first, and then whatever they could pick up otherwise from Argentina. So, but when the rest of the world saw those high prices China was paying, then they had to look around, and they eventually, where else do they go to find supplies? Well, probably to the U.S. And then you can see China, that projection of 99 million metric tons brought in is a record high. And is that high enough, really? Egypt for imports also at play. You also see India, soybean imports, strengthened demand there. Russia as an importer, a little lower production forecast now, and Thailand in play. So a lot of players in the soybean market. You can see the soybean production. We're 120 million metric tons. The rest of the world 250, and of that, let's go back a second. You can see we're 120. Brazil is 131. So they've surpassed us in soybean production, and Argentina not far behind. But you look at this. If you're not buying soybeans from Brazil, United States, Argentina, maybe Paraguay, and India and China don't send theirs out of the country, then where else are you going to go? So that's, we're, I think in economic terms, is that an oligopoly or oligopsony? Anyway, and you have the supply-demand situation. Production projected to be higher, but again, that's betting on the come next year in South America. And you see trade projected to be at stronger than current levels, sideways for ending stocks. Note that beginning stocks in Argentina and Brazil are negative. So I see the production number, but their stocks are less. So they better get that crop, or you're, if they're short, they're starting from a smaller demand base, and there's potential for the market to be positive next year because of that if they have any problems. And there's China's record high. Soybean exporter prices. You have Argentina, Brazil, U.S. at key places, and Brazil's price is higher. Why would that be? Well, that's where China's been going. And Argentina on the low side, U.S. at the Gulf about equal, but that Brazil number probably feeding, with China's influence is where it's at. So we've been getting some export business, and buyers, as they shop around without political motives, are coming in there, and we're even getting Chinese business too. You do see export sales. You have two charts here. 2016, 17, 18, 19 marketing years in terms of accumulated exports as of July the 30th. Okay. And you can see, yes, we're lower, and you can see in this most recent marketing year. But as on that same date, you look to the next marketing year, you see that far right chart. You can see that we're buying ahead. So a lot of what we've seen in business on weekly sales, or daily sales to China is showing up here in what we see out in the future. I read a headline that there's 7 or 8 days in a row now that China's come in and bought soybeans. So China's the big player in this, 60-some% of the world market, and you're seeing it. And this is July 30th, and it's moved up since then. Just for the U.S., you can see the importance of crush, and on the bottom side, and exports on the other, and we're higher or lower based on crush is pretty consistent, but we do great or we don't do great based on inversely on how exports are going. And there's the pace for all this excitement that I just told you about, and that says May 28th. That's actually August the 4th on that date. August the 6th, pardon me for the numbers. Latest numbers for this old crop marketing year, we're just kind of so-so, but it's the new crop, what's bought ahead. That's where the issue is. So you can see the bottom line there, the darker blue, total sales for new crop 2020-21, 660 million bushels. I converted it, 31% of the USDA's projection, with we're not even into the marketing year yet. So China's coming, and they're buying ahead. And you can see in this chart, if you dig deep enough into those weekly reports, you can get down to the details and look out to that. You get first 4 columns, outstanding sales this week, a year ago for accumulated exports, then outstanding sales. And that the second from the right, that's for the next marketing year starting September 1. There's China. And but also there's Mexico. You're down to the bottom side. So just interesting to see where is the soybean market going with this movement to get to secure soybean supplies. I think it has to give you some cautious optimism as to where things will go, especially if we have any crop shortfalls from storms or whatever. We've got buyers lining up in quantity out into that next year. Near the end here, again, another messy chart. You can see U.S. soybean price versus world stocks to use in 2020-21, 26%, they're at 26% and about 835 or so for the price. And we're plausibly explainable in terms of where we're at. We're a little low in terms of having a pessimistic price relative to that type of a long-term relationship. But how far are we low? Probably 50 to 75 cents relative to where we've been in recent years. So it quote is what it is. Is it current pessimism? Is it the current U.S. response psychically or in a narrative in terms of the challenge we see right before us? It could be, but it is interesting for this chart and and some others, but this one in particular, it seems that the price we have, if we were operating under the same type of constraints without any shifters happening on this relationship, we'd be probably at, arguably 50 to 75 cents higher than where we're at, but we're low right now. Okay. So I think the thing to do, we're right there, aren't we? Sorry about that. Let me get out of here. Okay. Stop share. So do we have any time for questions, I guess, Rich and Guy?
Yeah, go ahead. This is the last one of the day and the week, and so we'll stay around as long as people have questions and want to talk here. So go ahead, we have something in the chat from Michelle there. Dan, can you see it?
Yeah, Michelle, Ursic Flax, do you track any organic crops, or is the bulk of that remaining in the U.S.? Any outlook on organics, wheat specifically? Michelle, I could track that down, but I have to admit, I've been pretty focused on the broader markets. And I don't know that here in Kansas in particular, we're around the edge of some areas in Colorado, et cetera, where we'll grow crops where they can put together rail cars of product and send them out. There tends to be producer associations that do that, or 2, 3, 4 rail cars from an elevator. But they're not large market moving issues. So I have to admit, I'm just not close to it. Guy, are you?
Yeah, my comment on the organics, it's sort of a specialty market. A lot of that stuff would be forward contracted. I'd say some of it may be priced relative to an underlying bulk commodity as a premium to that. But so I think, you look at the bulk market to give you a directional price and issues, particularly since growers are always answering the question, what do I raise to maximize my farm income? Land use can switch pretty easily season to season. So I don't have anything specific on that. And it's a small percentage of the total crop. So
my hand grenade comment for today before you all leave is Guy, I'm going to say this just to antagonize you. Okay. No, I think you're underestimating how big an impact that China thing is. I saw your flood deal, and yes. And I know we have to be cautious. We have to be judicious. But where that plain, is that where they grow wheat at? And again,
most of it's rice.
Most of it's rice. Okay.
Most of it's rice. But you're right. And hence I picked up the phone and made a couple contacts with some in China people and asked that question specifically. And they were they really didn't change their corn numbers at all. And the soybean production numbers were minimal.
But something's afoot when every day they're coming to the market and buying. Every day something's happening.
Yeah. Well, look, I put it down to that ending stocks number, and I don't think it's there. The thing that I've been watching as well is the soybean consumption number, because I've always thought their recovery in pork production is not as great as what they're saying, and I think that's a political move. There was a question there, I think, from Lon on that about 40% reduction in pork imports for each month. Is this strictly politically driven? Look, a recent commentary I got from a guy in the meat trade, he suggested that it is, that they're just holding off until post-election and then they've got a meeting coming in the next few days to just review their first 6 months of their phase 1 deal, to have a conversation on there. But yeah, I'd say that's strongly political, because look, given the price relationships and the sensitivity of pork price, that consumer price index, that should be coming into the country.
That would never happen in the United States in our free-willing economy. You tell people, you just take pork out of your diet until the U.S. election's done. I mean, what a statement. So, oh well. Got a question from Matt Clark there. do you see China continuing to purchase acres infrastructure in the emerging markets? If so, what are we thinking about their true stocks? And as global ag tech improves, do you expect global wheat acres to be replaced by corn? Well, I guess broader economic commentary on their Belt and Road initiative is, I think that's what you're talking about, Matt, if I'm thinking right, is that there's, I don't know if you can say there's pushback, but COVID-19 has probably caused some countries to wonder about that. What happened in Bangladesh, where they had financed a port, and then and Guy, I think that's the right location. The Chinese had financed the building of a port. When they defaulted on a payment, the Chinese took it over.
Well, there's a number of that's happened on a number of places. And,
so that track record out there probably gives people pause for consideration as you go forth. And they were big in Italy, and again, COVID places where there was a lot of immigration back and people movement back and forth were some of the earlier ones hit by the COVID-19 thing. So what's happened here is at least giving pause to that. I'm not negative China by any stretch, but do they want to have that go forward? Absolutely. It seems to be consistent with their goals and aspirations, but it seems to have slowed down some of late. Am I right, Guy?
Yeah, well, look, I'd agree with you. There's extreme pushback there because of their behavior on a number of fronts. And I think people are having a harder look at that. The other thing I'd say is people are having a hard look at their supply chains. And I think, and as it relates to stocks, I think we're particularly seeing it in wheat and food grains, where this just-in-time delivery, they're realizing, well, maybe that's not the best approach. So they're reevaluating that, and maybe we do need to keep sufficient inventories of some strategic, not only commodities, but also parts, pieces, inventories of strategic product. The other thing we're seeing happen quite rapidly is an exit of manufacturing and the supply chains from China to particularly Southeast Asia, Latin America, and even back to the U.S. And COVID's kind of given us an opportunity to reevaluate that and make that happen. I think it's happening a bit quicker than a lot of people suspect on that. So they're reassessing their whole supply chain links and also that inventory situation.
On your second question regarding global ag tech, man, if there was ever a question for Terry Castens to answer, that was the one. You'd have a field day on that one. I think the answer is yes. It makes sense. Ag tech being the ability to more finely tune application of seed, fertilizer, chemicals at need, and at more effective corn or other crops. So generally yes, but I think there's a lot to that question.
Well, we've seen it happen already with just the shift in acres in Kansas. My projection is Kansas is going to be a corn state pretty quick, as we've seen increased planted acres in corn at the expense specifically of wheat.
And we've seen that in Ukraine. Ukraine's now the third exporter in the world. And where'd that land come from? That came from wheat and barley, so.
Yeah, so I think that's a trend that's going to continue as when the tech guys continue to make improvements there, it'll grow by leaps and bounds, and it'll, and the comparative advantage relationship on that as well.